stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
We're going to hear about a good value stock and a good momentum stock in this edition of Top Stock Picks. Our ETF Research Director, Nina Mishra, is here with me. You're going to talk about the momentum stock, and Jeremy, you're going to talk about the value stock, so let's get started with you.
Yeah, hi, Terry. I'm going to talk today about Ruth's Hospitality Group, ticker symbol RUTH. It's a Zacks #1 strong buy that will report earnings this week. And so I want to look into, the story behind the earnings and what to look for. But I also want to talk about the company itself. Now, Ruth's Hospitality owns Ruth's Chris, which I'm sure a lot of you guys have heard about. And there's a neat background story. The company was founded in 1965 by Ruth Fertel, who purchased the New Orleans restaurant by mortgaging her home for $22,000. She was known as a lively gambler, so this risk seemed to fit her personality. She actually played a game called Hollywood Gin, which customers would come in and challenge her to, and she would win more often than not. And she would take the tips and put them in the waitresses, or take her winnings and put them in the waitress tip jars. Now, a lot of people wonder why Ruth Chris is such a weird name. Well, Chris Steakhouse was the name of the steakhouse that she bought, and there was a clause in the contract that said she can't change the name if she moves the restaurant. Well, a fire burnt the steakhouse down. And so since with the original one gone, she had to move next door where she housed parties and banquets. And from there, she was in a new location. So her lawyer said, hey, you got to change the name. So she changed it to Ruth Chris Steakhouse, and it became a big hit and grew from there. Eventually, she was known as the First Lady of American Restaurants and the Empress of Steak. She died in 1999, and the company was sold to a Chicago investment company. And then it IPO'd in 2005, where it relocated in Florida. Now it is the largest fine dining steakhouse in the U.S. with over 150 locations. And the company basically targets both suburban and urban high-income leisure diners. They also go for moderate-income diners as well, celebrating special occasions like birthdays and anniversaries and such. Now, earnings are Friday, the 21st, before the bell. So what to expect there? Well, Ruth has beaten 8 straight quarters, the last quarter coming in with a 67 surprise beat to the upside. Now, Raymond James recently had an interesting note out, upgrading the stock with a $25 price target while raising estimates. The firm says the steakhouse segment has strong comps, which were better than expected recently. And this could be due to the nice weather. This was the 5th warmest January in 126 years, and people are going out eating. In fact, Knapp-Track said casual dining comps were up 4.1%, while high-end steakhouse comps were up 3.9%. So not only are people going out eating, but they're going out to nice places as well. So this fits in line with Ruth Chris. Beef inflation is also moderating, which will help the bottom line. And Raymond James thinks Ruth is a quality GARP story. So this is growth at a reasonable price. Now, within that, they love the strong operating culture, disciplined unit growth strategy, underappreciated franchise segment that generates stable and significant royalty income. And they like the balance sheet and free cash flow with a 2.7 dividend yield. This ties in with Zacks' style score of B in value. So this value with growth story is really interesting. Now, I wanted to look at some charts here. So we will look at let's see here. We'll look at the earnings surprise here. So this is what I'm talking about the beats in the last 2 years. We have 8 straight quarters, 67% beat, which sent the stock from 20 to 25. Had some pullback, another pullback due to the coronavirus, and now we're kind of grinding higher into earnings. Looking at the estimates, we see a gap here between what is expected and where the stock price is. So we have this growth anticipated and this value. So something has to happen where the growth either has to come in or the value or the stock price has to come up. So this will be interesting to see if the quarter ahead will fill this gap or not. Looking at the actual stock chart, I have a short-term chart with a daily and then the weekly here. At the daily, I have a short Fibonacci resistance break, which gives us targets at 24.50 and 28. And we have the 200-day and 50-day line up in the same place. So I feel like this is a really important area to break higher for the bulls, and we can get to these previous highs and perhaps higher. Now, looking at the weekly chart, over the last decade, we've created this nice bullish channel which we've been trading in, broke out of, failed, came back to the channel, and we were at the bottom right here. So this fits in line with my technical thesis going forward, is that we can break higher on a nice earnings beat and go higher. So look out for those earnings on Friday, and that's my top stock pick of the week.
All right, now we know the rest of the story. Jeremy Mullen. You're going to tell us the rest of the story on Microsoft.
Yes. that's
the stock that showing a lot of momentum as they have become the largest publicly traded company in the U.S., right?
Yes, Microsoft is the most valuable company in the world, publicly traded, with a market capitalization north of $1.4 trillion. Now, what we have seen recently that investors have been treating big tech as safe haven, as a safe haven asset, because if there are concerns about global growth slowing down due to coronavirus and other issues, then investors think that these companies, many of these companies, can still continue to grow their earnings and revenue if the global economic growth slows down. So that is why the technology sector is up 11% year to date, whereas S&P 500 has gained just about 4.5%, and even those gains, S&P 500 gains 45% of what S&P 500 gains have been powered by big tech. And today we saw that Apple shares are down a little bit because of, they said that they'll not be able to meet their guidance because of supply chain and other disruptions caused by coronavirus. Compared to Apple, Microsoft has minimal exposure to China and those kind of issues. And while some other big tech companies like particularly Facebook and Google have been in harsh regulatory spotlight due to data privacy and other concerns, Microsoft has kind of avoided those concerns, largely avoided those concerns till now. Now the company has kind of reinvented itself since Satya Nadella took over as CEO, and they invested a lot in their cloud business, Azure and Office 365, and that is paying off in a big way now. And Microsoft's Azure is the second player, number 2 in the cloud computing space behind Amazon's AWS, but they have been growing much faster than AWS. And that is why the recent quarterly results were much better than expected. They beat both on the top and bottom lines. And if you go to the code page on Zacks.com and look at detailed estimates, you will see that estimates have gone up significantly since they reported their results. About 13 analysts have raised their estimates for the company. And if you look at the longer term price consensus and EPS surprise chart, it looks beautiful. They have missed only once in the past 5 years. Microsoft is a number 1 strong buy stock as of now. Industry rank and sector rank both look very attractive, top 16% and top 13% respectively. Another reason why I like Microsoft is because they have been returning a lot of cash to shareholders in the form of dividends and share buybacks. Now, the dividend yield doesn't look great as of now. It's 1.1% because the share price has been going up so much. But I think because not many big tech companies pay a lot of dividends, so this is still attractive. It's not cheap. It's trading at a forward earnings multiple of almost 33 times. And shares are up 17% this year itself. But if you compare the valuations to those during, dot-com bubble era, they still look reasonable. And, investors like big tech, so Microsoft can continue to, grow, and their share prices can continue to appreciate.
All right. Do you own either of these two companies?
I own Microsoft in my personal portfolio.
Okay. Hey, Jeremy, how about you? Do you own either of these two?
I don't, but if I did, I would either own the stock or I'd buy the May 2250 calls before earnings.
Okay. Sounds good. Don't forget that there's always more stock information on our website, Zacks.com. Articles written by both Nina and Jeremy Mullen appear there as well on a variety of topics and stocks. So get on over to the homepage and check it out. Also, don't forget that you can get advance notice of positive earnings surprises now with Zacks Research Breakthrough predicting with about 80% precision which stocks are going to beat earnings expectations even before the earnings reports are issued. Get over to zacks.com/promo for details on that. With Nina Mishra and Jeremy Mullen, I'm Terry Ruffalo.